Welcome, everybody. I am James Kleimann, the managing editor at HW Media, and I am filling in for Sarah Wheeler today. And today I am joined by Chris Clow, the Reverse Mortgage Daily editor. And we're going to talk about the NRMLA conference and some of the latest happenings in the reverse industry. Today's episode is sponsored by United Wholesale Mortgage.
This is Sarah Wheeler, editor-in-chief at HW Media, talking with Christina Bennett, Senior Vice President of UWM Sales, about a career in the wholesale channel. Christina, becoming a broker can seem daunting. What advice do you have for those looking to join the channel?
Honestly, Sarah, becoming an independent mortgage broker is very easy. There's a lot of resources out there to be able to help people, whether looking to join an independent mortgage broker or become an independent mortgage broker. They can go to beamortgagebroker.com. We have step-by-step plans of how to become an independent mortgage broker. Or like I said, even if you're just looking to join an independent mortgage broker, it's very easy, it's very fast and efficient, and like we all know, it's best for consumers.
Thanks, Christina. And listeners, you can go to beamortgagebroker.com to get more information.
And today I am joined by Reverse Mortgage Daily editor Chris Clow. Chris, welcome back to the podcast.
Thank you very much for having me, James. I appreciate it.
Yeah, of course. So let's dive right into it. You have been away for a couple days. You just got back. Tell me, where have you been? What's been going on?
The National Reverse Mortgage Lenders Association had its first in-person event of the year. They had the Western Regional Meeting in Irvine, California, sunny Irvine. So they changed up the format a little bit. And traditionally, these kinds of regional events that the association has put on have been 2-day affairs. They actually condensed it all into 1 day this time. So it was kind of an in and out thing, which was designed primarily just to keep the costs that attendees incur in mind. And it was a pretty wall-to-wall program, just talking about the state of the reverse mortgage industry and getting a chance for a lot of these professionals to come together in sort of a communal setting.
Yeah, I think that makes a lot of sense, and good on them for consolidating into 1 day of program. I know that a lot of these conferences, I attend quite a few of them myself, they stretch it out over multiple days, and it starts to feel like on day 3, like, what are we doing here?
Yeah.
Couldn't this have been a 1 day or, maybe a 2-day thing? But
Sure.
Anyway, so kudos to the NRMLA folks for managing to get that sorted. Chris, what is the mood like for reverse mortgage originators and just people in the industry right now?
So the thing that's interesting about these kinds of events, and honestly this industry at large, is that since the market penetration is generally so low in comparison to the traditional mortgage market, a lot of these people, even though they're technically competitors, they don't really see themselves as competing with each other, just because they kind of have a blue ocean attitude about what the market possibilities are. So the attitude always tends to be very collegiate. And I don't know, I haven't really been to a forward conference. I've been so focused on reverse for the past nearly 5 years now. But I would guess, and I would probably bet, that the concentration of hugs between professionals is generally higher at a reverse mortgage conference than it is at a traditional mortgage conference. These people,
I wish they had some sort of a hug index.
Right. Yeah, exactly. It's something
you could measure, how good people are feeling. Maybe we can start this at the next NRMLA conference.
Yeah, we'll just have to sit in the corner and just like count the hugs that we see in comparison to total attendance, maybe. But no, it's one of the things that kind of surprised me when I first started covering the space, is just how open everybody is. And the thing that I found particularly interesting about this meeting, this is only really the 4th time that members of this industry have gotten together since the end of 2019. The end of 2019, the annual meeting was held in Nashville over a few days, and then COVID happened, and the trade association, which really is the driving force behind reverse mortgage events, industry events, I should say, they did what everybody else did and moved to a virtual format for pretty much the entire, I think they held off a little bit on resuming in-person events out of an abundance of caution, but they resumed for the first time just about a year ago. And it still seems like a lot of people in the business are getting reaccustomed to having in-person events. And there is a thrill that you feel among certain attendees for the fact that they are among their peers. There are only so many people they can relate to on a professional level regarding this specific business. So that I actually asked a few people if that might artificially inflate a sense of optimism that they feel considering the market challenges. The reverse side, like the forward side, is facing a bit of a reckoning in terms of volume directly related to rates. Reverse has a particular challenge related to industry liquidity, and that puts a lot of pressure on these professionals to try and deliver in a market that is sizably smaller than the forward side. But some of the people that I spoke to, they acknowledged that they might be feeling maybe a bigger sense of optimism because they are among their peers, but they don't feel like that overshadowed the realities that they're all facing, because that's what they were talking about. A lot of these industry professionals, particularly originators, are really focused on trying to find new ways to appeal to the senior demographic. And on that level, they can all relate to each other because they can all talk about the things that work, the things that don't work, the kinds of new referral partnerships that they're trying to obtain, and how they're engaging with the community, particularly, since it's senior focused. And so much of the danger during the pandemic seemed really concentrated on the senior demographic because they were the ones most likely to develop serious illness from COVID-19. That necessitated sort of a new approach to finding referral partnerships and to finding borrowers. So they're still talking about that. They're still talking about maybe reaching out to community banks who might be a little bit more amenable to engaging with a reverse mortgage professional. How they're sort of dipping their toes back into certain community events. Like I've talked to people who go to things from real estate CE classes to setting up tables at county fairs to try and get people at least aware of the reverse mortgage product. So that collegiate attitude really did dominate, even though it's a challenging time for the business. But I think that anyone in the reverse mortgage business would probably tell you that they're optimistic in the face of a fair amount of gloom that arises. But this is also an industry that has seen such an abundance of change and such a change in stature in terms of volume levels over the past decade plus, that they kind of roll with the punches.
It's interesting, Chris. You mentioned that you're starting to see some of this community get out. We're definitely not post-COVID in some respects. People are still getting COVID. People are still dying of COVID. I don't mean to express that this is no longer a consequential illness that people or society needs to face, but from a policy perspective, we are really in the post-COVID era, right? And what I find striking is in the forward community, so often when I speak to CEOs at midsize, even small lenders, and I say, how do you find LOs to hustle? How do you convince them to not be just hanging out at home and kind of phoning it in and not really getting out there, being aggressive and all that? And they say, we have this problem where just a certain percentage of the LOs will probably never hit the levels that they ever did in, kind of that 2020, 2021 period. And they don't want to make a million phone calls. They don't want to go to events. They don't want to go to open houses. They no longer want to be out and about. Did you get a sense that there was a lot of excitement, that people were happy that they had sort of, the spring fever, right? They wanted to get out. They wanted to network. They wanted to see their old friends, or was it more that there was a reluctance to kind of get out there and be seen and see?
There's really a lack of reluctance, like a pronounced lack of reluctance. And what you mentioned kind of speaks to some of the core fundamental differences between forward and reverse, because since the primary demographic now is predominantly made up of baby boomers, they are sort of on the cusp of a transition between conducting their financial services over the kitchen table and in offices and in banks to conducting more of their financial affairs online. And that's kind of a line that the reverse mortgage industry has sort of struggled to address. The home equity conversion mortgage program sponsored by FHA is very heavily regulated, because seniors are a protected class. But that also speaks to the desires that sort of the clients have in terms of who they want to connect with and how they want to conduct their business. Most of the time, if there's any common refrain that I hear about conducting reverse business in comparison to forward, because a fair amount of reverse mortgage professionals started doing forwards earlier in their career. It's that it is so much more consultative. There's so much more hand holding, and there's so much more of an interpersonal relationship that is created between the originator and the borrower, that they can't really afford to sit at home if they want to sort of forge these more meaningful connections with borrowers. So since things, as you mentioned, from a policy perspective, have certainly opened up in comparison to 2020 and 2021, there is an invigoration among the community of reverse mortgage originators and brokers to go out and forge those connections. They kind of feel like their shackles have been removed. They can go back to doing the things that they are comfortable with. There's only so much that they can do by staying in their offices. And it seems like a lot of reverse mortgage originators in particular recognize the necessity and are really driven by the idea of going out and forging connections with borrowers, but also with those referral partners. At the same time, too, there is excuse me, there is a noted lack of quote unquote new blood entering the reverse mortgage business. Actually, the day before the NRMLA conference took place, and I actually did a profile on Christina Harms-Heike, who has started a reverse mortgage coaching business to try and bring more people into the fold. But bringing more people in has not been the industry's strongest suit, and that's where Christina sort of identified a market that she might be able to fulfill. But the fact that there is a noted lack of people in their 20s, 30s, and 40s that are involved in the reverse mortgage business at that professional level, that also means that they might be more predisposed to sort of getting out of their offices and going out and finding those referral partnerships than some people on the forward side. But the forward side, again, is so much larger. And the way that reverse mortgage professionals I talk to characterize it is that it's a far less personal relationship. So it might be easier to generate business by staying at home and making those phone calls. Whereas on the reverse side, the fundamentals are different enough, at least right now, that they really love the idea of getting out and talking to people.
Yeah, and digital marketing is probably not going to be as effective when your demographic is older and uses the computer less and is maybe just more physically somewhere than digitally in that place. But when we think about demographics, we are not far off from Gen X. Really starting to get into that. Were there any discussions at this conference, Chris, about reaching Gen X and whether the technology needs are maybe better suited?
There were a few conversations. None of the programming content was dedicated to sort of expanding the scope to Gen X, but that is certainly a topic of conversation that I have had with a lot of industry professionals, particularly over the past couple of years. When some of the lenders started lowering the minimum age for their proprietary reverse mortgage products down to 55, that really did open the door to start looking at Gen X. And that's only going to grow more pronounced as time goes on, because there's data that indicates that Generation X is less financially stable than their baby boomer parents. So that could open a door of opportunity that perhaps isn't open to baby boomer clients. I mean, we'll see. It'll take a while for that generation to really take hold in the space. But in terms of like the use of technology, it seems a little bit more prone on the servicing side of the reverse mortgage space, because it seems like there are seniors who are becoming far more used to, and even they might have a preferential attitude toward conducting their banking matters through online portals. And the servicing side has been a little bit more proactive in facilitating that. But at the same time as well, there are a sizable number of baby boomers who are on Facebook in particular. Facebook seems to be really the social media platform of choice for older people. I know that my mom probably spends way more time on Facebook than she probably should. Yeah, right. So there are some more concerted marketing efforts that are happening there. But actually, there was a little bit of a side conversation that emerged about opening up social media marketing opportunities to additional platforms to try and capture more people potentially on that sort of Gen X baby boomer cusp. And one person I spoke to said that he's a little less inclined to try and seek out these newer forms of social media just because it doesn't look like that's where his clients are. But he also, to his credit, recognized that that's probably where they will be. So it's something that should be taken more seriously, at least from his individual perspective. But there wasn't as much conversation about the transition to Gen X. But honestly, the transition to the baby boomer generation is a relatively recent innovation, like within the last 6-7 years, that the industry has sort of had to reacclimatize itself to, compared to like the silent generation, for instance. But the technology conversation is always an interesting one because the attitudes of the demographic are going to shift rather dramatically over the next several years. And that's only going to be exacerbated by the fact that on a longer stretch of time, our population in the United States is getting older faster.
Did you hear from any reverse mortgage professionals that are managing to generate business from, say, Facebook, or are there any lead generation purchasing opportunities that are coming from kind of the platforms where the demographic is?
I feel like in this instance, it wasn't much of a driver of conversation, but I think that stems more from some of the ad buying policies that Facebook has implemented over the past few years. There's actually a story I wrote a couple of years ago about how they were becoming more restrictive of mortgage marketing, especially mortgage marketing that could discriminate based on age. But in the case of
they had some fair housing issues a couple years ago.
Right. Yeah, exactly. But with the reverse mortgage industry, it's not a matter of discrimination as much as it is a matter of compliance. They can't market home equity conversion mortgage products, for instance, to people who are under the age of 62 because they don't qualify for it. They legally don't qualify for it. They legally don't qualify for a proprietary reverse mortgage, even if the age goes down to 55. It's not a concerted desire to cut people off from access to a reverse mortgage product. It's a matter of compliance. So I think that the industry is still sort of navigating that, but that doesn't diminish the fact that there is a lot of interest to look at Facebook in particular. But I remember one tech professional that I spoke to a couple of years ago who said that, well, you just have to buy the data from a different place. You can't, you can observe those requirements without necessarily going directly to the platform holder to get the kinds of insights that you want. But it is still, I think it's still kind of an unsettled area in terms of reverse mortgage marketing.
Chris, in terms of some of the meat and potatoes issues in the reverse community these days, we've seen, just as we have on the forward side, we've seen a lot of consolidation. We've seen a couple pretty big name lenders go under, and forward Home Point is no longer operating. And of course, we had a similar issue in reverse. And we've seen FOA acquire AAG and now very easily the largest player in this space. Were there discussions about where the industry is headed? Is there more consolidation? Are there more lenders expected to leave the space or not survive? It's a very unforgiving market, both in forward and reverse right now. Volume is quite low.
Yeah, it's funny because on the way into the event venue, which was the Sonesta Irvine, across the street from the John Wayne Airport in Santa Ana, there was I saw the AAG Tower. And I was really tempted to go over there and see who was there, but I didn't have time, so I couldn't do it. But it doesn't sound like there's an abundance of concern related to additional consolidation, especially because the liquidity challenges that have been created sort of on the heels of the bankruptcy and exit of reverse mortgage funding are getting more federal attention. Particularly from Ginnie Mae and from FHA and from HUD.
A lot of restrictions now that were not in place a couple months ago.
Exactly. So it seems like the conversation is more centered on just trying to find ways to enlarge the base of borrowers. The representatives of different companies that I spoke to are sort of getting used to the idea of the hierarchy of leadership in the industry changing. the most recent endorsement data for the month of May did not show for Finance of America any quote unquote bump related to the acquisition of AAG. So technically speaking, the leading reverse mortgage lender in the space right now is Mutual of Omaha. That could change as time goes on, and FOA starts to
I think
assert.
it will.
Yeah, I mean,
Yeah, this doesn't seem like much of a hypothetical to me, right? I mean, they acquired the biggest company in the space, and Mutual of
yeah.
Omaha hasn't really changed their strategy, right?
Some of the analysts that I spoke to weren't 100% sure that it would be 1-to-1 once the incorporation of AAG into the FOA infrastructure is complete. But I do think that, yeah, it's a pretty likely scenario that Finance of America is going to shoot to the top of the list once they fully take control of all of the recent assets they've acquired, not the least of which being the likeness and use of Tom Selleck as an industry spokesperson, and well, as a company spokesperson, but he's really seen by a lot of people as an industry spokesperson. But the attitude really did center on really a voracious appetite among the originators in the audience, in particular, for new ways to try and market to people. That was really the driver of a lot of the conversations that I heard on the sidelines and that I had with a fair amount of people on site. The companies themselves, they are not shying away from the fact that there are challenges in the space, but I didn't hear from anybody that indicated that they were going to be pulling back. If anything, I've heard of additional investments being made in the reverse space. And I think you've seen that with Guild Mortgage's recent acquisition of Cherry Creek. Cherry Creek had a very well-built and leading reverse mortgage division that is now a part of Guild. Guild did do some reverses in the past, but now their reverse posture is significantly improved. And there were a couple of representatives of Guild that were on site that I did speak to at the event, and they acknowledge that there's a lot of work to do to get things up to snuff, but they don't seem predisposed, I guess, to reducing their activity in the space. If anything, it sounds like they want to increase their activity in the space, at least based on the conversations that I had.
In terms of the servicing, Chris, we hear a lot on the forward side about how government regulation and the watchdogs, the CFPB, some of the state's attorneys generals have been very, very aggressive, and it's adding a lot of costs to the servicers. I'm curious if you've heard of any concerns about regulatory oversight in the reverse servicing space.
Regulatory oversight doesn't seem to be a pronounced concern right now. The biggest concern in reverse servicing for the past several years, up until probably the end of 2022, was just in the posture of the then current reverse mortgage servicing contractor, the ones who actually service the loans that were assigned to HUD. And that changed. C-Link is the company
that was resolved.
C-Link picked up the servicing contract last year, and the response by the industry was very positive. In fact, during a panel conversation speaking with a couple of representatives of HUD who are reverse mortgage subject matter experts, an originator thanked them for moving the servicing to C-Link. So it seems like servicing issues are not really at the forefront at the moment, at least in terms of the broader conversations that are being had among professionals. But there are more companies that are becoming more active in the reverse servicing space. PHH is becoming a pretty big reverse mortgage servicer after they purchased the servicing assets of Reverse Mortgage Solutions, RMS, a couple of years ago. And I know that Longbridge is very active in servicing, but really the tenor was pretty positive when it came to reverse servicing ever since the servicing contract was handed over to C-Link.
Chris, any other takeaways from this conference?
I think the biggest takeaway that I got from it is that the industry's identity is very much shaped by an attitude that is founded on resiliency. In spite of the challenges that the industry seems to be facing, a lot of these individual professionals, and certainly the companies and the trade association even, They seem to really relish the idea of trying to find a way forward, and it certainly seemed like an infectious attitude in comparison to a lot of the other conversations that I've had. But the headwinds are also very real. But they've also faced these kinds of headwinds before. If you look at where the reverse mortgage industry was at on the heels of the financial crisis, for instance, loans that were originated between 2008 and 2010, they're still kind of dealing with problems from those loans well before a more highly regulated posture was handed down during the Obama, Trump, and now Biden administrations. So
And those were existential threats. Today they're dealing largely with liquidity issues.
Yeah, and volume has dropped significantly since then as well. Particularly after the exits of major financial institutions like Wells Fargo and Bank of America. And I know that the industry would relish the idea of those kinds of long-standing institutions getting involved again in the space. There's no indication that I've heard of that happening anytime soon. So they're really focused on facing the challenges, on the current basis and with the current leadership in place at the association and at the companies. But they all seem very optimistic about what the future will hold. Whether or not that optimism ends up panning out is anybody's guess. I mean, volume has taken a big hit ever since the pandemic-driven Heckam to Heckam refinance boom dissipated. But that also means that the industry has had to reorient itself to finding new borrowers as opposed to the borrowers that have engaged with the product before. And that is a challenge, but it's also a challenge that the industry seems very willing to take on. So positive general feelings that people seemed to have while acknowledging those challenges. And we'll just have to see what the future holds.
And there are other challenges in the form of similar products that are not reverse mortgages, right? There are a lot of home equity products right now that the people are able to tap that they don't have to be seniors necessarily, right? But that does limit some of the pool, right?
Yeah, it's funny. I've talked with some of the alternative equity tapping companies who run products, like shared equity investments or sale leasebacks. And a lot of those companies are kind of a niche within a niche, and they actually seem very willing to engage with the reverse mortgage industry to potentially capture borrowers that may not qualify for a loan like a HECM. So there seems to be, again, this very collegiate attitude that even emerges on that side. But yes, at the end of the day, they are competitors, and whether or not that's going to sort of upset the established order of home equity tapping, we will have to see. But in terms of the conversations that I've had with leaders at those companies, they seem eager to engage in potential partnership opportunities with reverse mortgage companies.
Well, we'll see if there are more hugs next year. I think that'll be very telling.
Yeah, most definitely.
Chris, thank you so much for being with me today.
Thank you.
And we're out of time, so we got to wrap it up there.
Oh, much appreciated. Thank you, James.